We're all set to go. Let's get going, guys. I, as usual, have a full hour packed, so we're going to get right to it here. This is, again, ought to be I'd call this maybe a little higher level talk. I'm not sure if that makes sense or not. And I just say that because some of you, if you're a little newer and you're looking for just kind of a basic rundown of what's on a chart or something, that's not what tonight is about. It's kind of a higher level concept for traders. I think any level will appreciate it. And for some of you that are having issues with management, which if you're trading, you're having issues with management. I still have issues with management. You'll never get over that. It's just a matter of how well you deal with them. So I think this will be a very useful talk. It may be a little, I don't know, sometimes I get a little out there, I think, sometimes in the things I say, but let's give it a shot and see how it goes, right? So this is called the walkaway, a discussion about trade management. I sent out with the email, there was a little blurb on there, and this came out with the original email, blah, 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 you can read that, but here is the one that I wanted to send out to explain, because when you read the walkaway, you may either not understand what it means at all, or those of you in the room or have been in the room would understand the simple meaning of it to walk away on a trade, to do the Elvis and leave the building, and you probably heard me talk about that. And that's a very simple use of the term, but that's not what tonight is about. That would take 5 seconds to explain. This is a little more in-depth concept about the desire to use the walkaway as a trading management concept. And I mean as a whole plan, not just as something to do. So I'm going to go through that toward the end. And in the meantime, I want to just take another shot at looking at some of the management concepts because they are, in my view, the number one issue for traders at some point. So it says I've done a couple of prior events over the years about management. I don't want to repeat most of those, so look them up if you like the topic. If you go to the Free Stuff page or YouTube and you look for titles that have management, I think there's 2 of them in there. And remember, you may have to go to the archive page if you're on the DTS site. YouTube doesn't need an archive page. They just keep going back forever. Or I don't know, maybe they run out at some time. If YouTube ever cuts them off, I never even looked. You just go to the DTS website and they're on the archive page. For many traders who struggle, their biggest issue is trade management, and they do not even realize it sometimes. I want to review some highlights and discuss a new topic using management as a way of trading, hence the term the walkaway. As a day trader, I plan for the walkaway, which means management is predetermined for specific purposes. This will be a large part of the discussion. The concept can also apply to long-term investing. The same concept, obviously, you have to slightly change the mentality because you're not walking for a day as a long-term investor, but it is the case that you get yourself set at certain moments and then leave things alone. So I'm not going to go through the long-term aspect of it, but you can probably kind of piece together what it would be. It is a similar concept, the walk away for long-term trading as well. I sent that comment to clarify because there are different levels you can read into a statement. Yes, a small part of this may be that you can make some money by walking away rather than sitting there. It depends mostly on what level you're at. Now, what that comment there means is that the more, how do I phrase this? The worse you are as a trader, the less you will notice terrible management. Does that make sense? As a matter of fact, a really bad trader will appreciate and benefit from terrible management. Does that make sense to anybody? A really good trader will really be hurt by bad management because there's something to be hurt. In other words, if I know the charts well and I have charts that move a lot, right? And then I squander away all my profits from stupid management is really hurting me. But if I'm a trader that is all losing trades and I overmanage them, well, I'll be reducing my losses and extending my life as a trader to 6 months instead of 3 months because I'll be minimizing my losses. Does that make sense, everybody? Yay? It's a quasi-important comment because it leaves you in this paradox where you tend to not notice it because you're a good trader, so you're making a little money, you don't worry about these things. When you're a bad trader, everything's falling apart and you don't even know where to look. So it's this thing that catches good traders. The deeper meaning is to have your goal is to do everything in preparation for the walkaway, preparing your day for the walkaway. But it's more than that. I'm talking about the goal of setting up for the walkaway, to position yourself where you do not need to worry about managing, no worries. So you have a goal of getting yourself to a certain point where you are comfortable leaving and you're able to leave and not worry about management because in some situations it's tough to manage. If you're, and even for me, if I start the day and I'm down 1 or 2 and then I got a winning trade coming back, it's tough to manage that one, right? You guys, do you feel that? Man, those of you that day trade, do you feel that? You have a couple losers, you want to take that winning trade and just kind of take something out of it to kind of minimize the pain, right? But that's often the exact wrong thing to do. It's exactly the wrong thing to do, because if you continue to have, let me draw on here a minute, if you continue to have a losing trade, -1, am I drawing in the right spot? Yeah. Another losing trade, -1. And let's say your next trade is going to be a 3-hour winner, and that's going to make your goal for the day. But on the way to becoming a 3-hour winner, you're +1, you're +1.5, the trade starts to stall, and you go, you know what? If I sell it here, guess what? I'm only down a little bit for the day. And if you start using that mentality, guess what you're doing? Anybody fill in the blanks? If you start using that mentality to say, well, you know, if I sell this winner now, I'm not down for the day, and that feels pretty good. Yeah, it's even worse than dying a slow death. But if you think about it, you are actually planning on losing. You're trading to be a loser. Your goal is to be a loser, right? Because you lose, and then you say, well, just give me back some of that loss, right? Just make my loss smaller and I'll be happy and I'll get out. And that comes from a lack of confidence, a lack of not knowing the charts. And sometimes it can come because you just had a tough day or two, right? You've had enough and you're like, oh my gosh, you know, I would appreciate a lesser loss today or something. But if you do that as a habit, it's going to come back to bite you. It'll kill your career. Let's review why this topic is so important. Here are some real useless or stupid cliches. The fact that they are popular is an indication of the issues that are out there. Let your winners run and cut your losers short. Well, that's a nice saying. The equivalent of that saying is, here's how you trade successfully. Buy low and sell high. It's a theoretical, it's the goal, right? But it does us nothing as a training tool to help us. Of course, you let your winners run, cut your losers short. How do you do that? Where, when, how? It doesn't help us. Exit when the trend changes. That actually is not, in theory, you may think it's correct. This slide is actually from class that I teach. We go on to discuss how that actually is not correct. Exiting when, even though you may be in a trade because it's an uptrend. And it makes some theoretical sense to you, as it does to me, to say, well, if it's not an uptrend anymore, I don't want to exit. I don't want to be in it. But actually, that is the worst moment you can exit, statistically speaking. So that is actually not a good saying. Get to break even as soon as possible. That's just a stupid saying. Break even is not on a chart. Or you got into a position nobody in the world knows, nobody in the world cares. What matters is focal areas on a chart that may or may not support your trade, right? Can't go broke taking a profit. That's just stupid. That's just idiot speak. That's how, and unfortunately, this becomes one of the most commonly phrased excuses for traders to take money in a trade without any plan, rationale, concept. And while, yeah, theoretically it's true, if you never had a losing trade, I guess you wouldn't be a loser, I don't know. But you do have losing trades. And by constantly taking tiny winners and justifying it by saying you can't go broke taking a profit, again, you are setting yourself up in a procedure where you're guaranteed to lose. Guaranteed to lose. It's not a good way to do things. You have to keep in mind, here's a really nasty slide. Some of you may want to send if you have any children in the room, you might want to send them out of the room, and you may also want to just kind of close one eye yourself. A lot of advice you hear is geared toward new people and to keep them from losing too quickly. Hey, folks, who has a motivation to keep people from losing too quickly? Brokers, right? You know, the thing in the brokerage industry is this. Their kind of thing is that, look, most people are going to go broke. Let's get them to get all the trades and commissions we can. If they can just die a slow death, we make money the whole time they're dying, right? I'm sorry, it's just what it is. So, I mean, that's why you hear a lot of this stuff out there, right? It's just wrong. But yet it's the most common stuff you hear out there. A lot of advice is designed to sound good, as is appealing to your ears, easy to do, and becomes popular. A lot of advice is given by losing traders who give advice anyhow. Most advice is geared toward having you lose slowly. Does that sound good to you, to lose slowly? Here are a few of my cliches. I had so many, I didn't put them in here, all of them. I put just a few of them in here just to highlight, because again, some of these are in a couple other videos. I don't want to spend a lot of time here. I want to get to kind of the heart of tonight a little bit. This is kind of just the big mantra that I think was actually in the initial email invitation. Anyone who really wants to can learn to read a chart with plenty of precision to make money. If you want to, you can. If you make money with that knowledge depends on your management. Eventually, all traders succeed or fail based on their management. That's my quote. Eventually, all traders succeed or fail based on their management. Now, naturally, you do have to get to the first steps. You have to learn how to read charts, and that's not necessarily an easy thing, but anybody who wants to can do that. If you want to learn how to read a chart to make money, you can do it. You can do it. It's just anybody who takes class with me gets the knowledge to do that. What you do with that knowledge, of course, is a different topic. A lot of people have no discipline. They never finish what they're supposed to learn. But it's the management that eventually ends up making or breaking you. And that's why this is such an important topic. I pulled two of these from, I haven't sent one in a while, but I started sending out the DTS trading tips, little quick tips they were called. And there are 5 of them that went out so far. And 2 of them had to do with management, so I put them in here. Think about this a minute. Really think, don't just read the words, think about this a second. Anytime you're in a position that hits its target, right? So you get in a stock, and you put your stop somewhere, and you say, I think I can get to here, yesterday's high, right? Whatever it is, right? And your stock gets there. Maybe it takes all day to get there. Do you realize that if you hit your target, that any and all management you do cost you money? Can everybody acknowledge that's true for me? Yes? Or did I lie? Is that true? If you hit your target, anything you do to touch that trade has cost you money, correct? You don't get it? If your stock hits your target, you will make 100% of your money if you just let it hit its target, right? If you just walk away, offer it out, boom, there's 100% of your money. You made whatever you risked, you made 100% of your risk at target, right? If you come in here to manage, meaning that somewhere along the way you decided to raise a stop to protect profit and you got taken out, well, you only made half the money. If along the way you sold some to just ensure you get some money, then you water down 1/3 of the trade. Yeah, that's what I mean. Now, I'm not saying, please understand, the reverse is that is not what I'm saying. I'm not saying you should never manage anything, right? I just want you to understand that every time you hit a target, all management you do costs you money. So there's a balancing act. Right? Management is there for when we don't hit our target, right? Like a couple of things we don't want to have happen. If I get in a trade and here's my target, the extreme case, I really don't want to get 99% of the way there and then take a stop out, right? That would be kind of silly. So we don't want that to happen. But how about in between? Where do you draw the line? Where do you draw the line? I mean, if you get 1/3 of an hour profit, can you still let that stop out? But if you don't, then aren't you just taking minuscule profits on all your trades, right? So I'm not here at this moment to teach an 8-hour class on management, but there are answers to these questions. I just want you to keep in mind, given the choice between protecting profits and getting to full targets, what do most traders do? Do they protect profits or get to targets? PP or GT? Do most traders, like 95%, do they favor protecting profits or getting to targets? Yeah, protecting profits by a huge landslide. Probably all of you listening to me. Very few exceptions that are that case. At least day trading, it is certainly the case. People are a little better at it longer term. And this obviously becomes a real problem. So the reason I'm emphasizing this slide is because I don't have to encourage you to take profits. People do that way too much, way too fast, right? Now, one reason people take profits is because they don't have a lot of profits to take, honestly, right? I mean, if you're not a great trader, you're happy to get a little bit in your direction and you don't want to lose it, right? But as you get a little better and you see, hey, you know what? I took profit on that and boy, it went 3 times further than where I took my money. Maybe I better stop and look at this. And the next one went twice, right? So that's what you have to be on top of all the time. So that's one of my favorites there, just a realization. Again, it is not saying that you don't manage. It's just a realization that if you manage and you hit your target, you cost yourself money. That's all. Do you consider close of the trade that hits target management? Oh, I see. I understand your question, Steve. I'm not sure how to answer it. Let me put it this way. The way I teach it in class is that we talk about, when I walk away, I have to pick a target. I mean, one of the targets could be end of the day, meaning I just never touch it. I'll show you that in a minute. But if I have like the whole trade open, I usually will pick a target. And if I walk away, I have to hit that, and I consider that successful management to hit your target. Yes. Now, a separate issue is, Steve, when you go back to review, if you're hitting your targets, that's good management. But what if your target selection stinks? That's a separate topic, sort of, right? In other words, you got to go back and say, my initial trade selection, I've been picking 20-cent targets and they're all running 90 cents. That's not very good target selection. You're picking such chicken targets that anybody could hit them. So to me, it's a trade selection is one thing. You have to make sure you're picking reasonable targets. And then trade management is how well you handle getting to that target. So it sounds like I answered your question there. I like this tip a lot too, by the way, because everybody, including myself once in a while, does it the other way around. You go for the home run when you don't need it. Don't go for the home run when you need it. Go for the home run when you don't need it. What does it mean, the home run? Well, every once in a while, I'll see a trade, and I'll say, you know what, this thing could really move. I try and get in there with the intention of maybe getting a little bigger sure size rather than giving it extra room. And walk away and hope maybe I get a home run out of it, you know. But that's kind of what you do with the gravy money. And I think it's a good thing to do because you pyramid your profits, sort of. But it doesn't work when you do it out of desperation. You know, when you're trying for that Hail Mary comeback trade because you had a crappy day, it doesn't work well. It's not when you do it because you're not psyched to do it right, and you're never going to get to that target probably unless you do walk away. So there's a bunch of fun slides. Some questions to help you think about your trading manager. What do you do after you enter a trade? If you honestly think about it, or if somebody was there watching you, if you're in a day trade and you're using a 15-minute chart, for example, it almost kind of cracks me up that sometimes people who are entering something, even take a 5-minute chart, right? Let's say you're entering some kind of pullback. I'm not going to get all strategic here, but you're entering some kind of pullback on a 5-minute chart, right? And you're going for some target up here. Do you realize that theoretically you have nothing to do for at least 20 minutes? At least according to me. You have nothing to do for these 20 minutes, right? In other words, so you set your target up here. You have a stop in place, right? Your stop's in place. Great. Why are you sitting there staring at the trade? What can you possibly do? If you're in a trade, there's only 3 things you can do, right? You can get out. Well, that's what your stops are for. You can get out at a target. That's what your target's there for. And then you can perform some kind of management. But how do you get in a chart, on a 5-minute chart, and start managing in less than 20 minutes? I don't understand how you would do that. I mean, I guess if you came really close to your target all of a sudden or something like that. But in the beginning of a trade, to sit there with your hand on the mouse, looking at the futures, looking at your stock, what are you doing? What are you doing? You have no right even looking at it during that period of time. So that's a question to think about if you're having trade management problems. Yeah, exactly. When you review your trades at the end of the day, which you probably don't, many of you probably don't. I'll talk about that in a minute. But if you review, and you had a target selected, and you look and you say, wow, I got out way before my target. Here's a question for you. Did you have no idea how to get to the target? Or did you know how to get there, but you just didn't do it? In other words, is it a chart reading issue, or is it a psychological issue when you take a quarter of your target that you wanted? What is it, everybody? 99.9% of the time. Is it because you just didn't know how to take a target? You just didn't know, just couldn't figure out how to do it? Or you knew, but you just hit the button and sold way too early? Yeah, think about that, remember? A lot of this target stuff is very psychological. Now, it depends what kind of trader you are, but it always kind of cracks me up because people will make up these rules, these magical rules. These really good traders will come up with these rules where I won't take a trade unless it's a 3 risk reward. And then you look at their trading results, and all of their final risk rewards are like sub 1. They're like 0.8 to 1. They're taking little tiny targets anyhow. So it's make-believe. So one of the issues is look at your final results and take a look. How many times do you have a total trade? I mean, I don't care if you sold it in partials, that's fine. But at the end of the total trade, when you average it out, how many times do you have an over 4-hour trade, over 3 hours, over 2 hours? Have you ever looked at this? If you are constantly shooting for these 3-hour targets and you never take more than 1.5, you have some serious problems, right? Do you understand this question up here, everybody? So you're risking $500 a trade. And the question is, how many times do you have a $1,000 winner? How many times is that? Now, it could be that your trading style is that you are looking to take 1.5 hour winners, and so maybe it's just fine. But how many times are you, in other words, hitting the average target you want to hit, is my point. If you look, you're probably going to find it's not nearly as good as you may think, or it's worse than you think bad is. Tight stops is a conservative way of trading investing. Is that true or false? Tight stops is a conservative way of trading or investing. True or false? Yeah, it's false. So everybody stop telling me that you weren't sure about the trade, so you tried it with a tight stop. That makes no sense. A tight stop is more likely to stop out. So there's a bunch of sayings, if you will. My cliches are not always as popular because they require you to know how to read a chart. See, a lot of the, like I said, a lot of the cliches for management all are kind of centered around people who aren't real good at reading charts, that don't really make money, and they're just trying to prevent you from bleeding. So it's hard to turn the corner and understand the difference between minimizing losses, which is what most people are taught to do, and to actually try to make profits, which is what you have to do. Let me repeat that because it's not on the slide. It's hard for a lot of people to turn the corner from the thought process of minimizing losses to the thought process of maximizing winners. Does that make sense, everybody? Does it make complete sense? And understand, I'm not against minimizing a loss. I'm not going to tell you, I do that sometimes myself. My issue is when it's your goal to minimize losses. When you get in a trade and your first thought is, how can I protect some of this trade, right? Death of 1,000 paper cuts, they call it. All right, some steps to improve. If you're serious about getting better, we're getting to the best part of this now. So we're getting to the instructional part. I think all of this is good, but some steps to improve. If you're serious about getting better, here's the three-step process. Number one, awareness. Think about the first step in Alcoholics Anonymous. So many people don't even realize that they have a management problem. I'll explain that in just a minute. Number two is self-evaluation, to figure out what you're doing. And number three, choices to manage. It's part objective and part personal. The perfect plan that you never follow does not do you much good, right? It's one of the biggest things I see in trading plans, is the management part of it becomes just a theoretical thing that nobody ever does. It's kind of like the person who goes on a diet and says, I'm going to drink water 6 days a week and eat 3 crackers on Sunday. You're just not going to do it. So don't kid yourself. Do something that you can do. If you have a management plan that is so completely against your mentality of trading and you never follow it, what's the point of having it? So you have to come up with something that is something that you can actually do. Number one, awareness. Very simply, you'll never fix the problem if you don't know it's there. Here's a big one I want you to really think about, and we'll talk about looking into this on the next couple of slides. But when you start, a lot of people have the problem with big losses, right? They don't take stops, but that to me is not a big deal. That's a self-fixing problem because you're keenly aware of the issue. It's like having a broken leg, right? You don't not notice you have a broken leg. Right? It's a broken leg. You're looking at it. You got to do something about it. You can't go home at the end of the day with a $3,000 day trading loss when you're risking $300 and just say, well, I didn't notice that. I mean, obviously it's killing you. And you either fix it or you don't. But that's just simple psychological take your stop type of stuff going on. That's why I'm not all that concerned about that first step traders go through because they got to get through it. But bad management is like a silent cancer, because you may not even notice it. You may even be proud of it, right? You may look at your trading results, and what do most people look at, by the way? When you look at trading results, like what's the first question I'll get asked about the room if somebody asks me a question about the room? First question, always. Yeah, what's your batting average? What percentage of winning trades? And my answer is, well, who gives a crap? Why don't you talk about how much money we make? Percentage of winning trades is irrelevant. You know, it just is. Now, percentage of winning trades is fine for me. It's probably, I think, what most traders would be at. But it's not the key thing. A lot of people have 60% winning trades and they lose money, hand over fist, right? And this is where the silent cancer comes in, is that they just keep thinking, well, I got more winners than losers. I'm sure this will work itself out. And then they start thinking, well, okay, you know what? Some of those trades yesterday, I should have let them run a little longer. I'll do better tomorrow. You ever said that to yourself, anybody? You look at your results and you go, well, you know what? I'll do better at that tomorrow. And you say it the next day and the next day and the next week and the next month, and it never ever gets better. So this is why the trade management part of it is such a disastrous thing, because a lot of people just keep going on and just keep having small losses and never ever realize that there is an issue going on because they don't acknowledge it. Awareness. Your thought process is, I have to get some better targets and we'll make more of my winners. I'll do that tomorrow, but you never do. Sadly, you may not even know your trades you took were, if you were maximized, if you could have made 1.5, 2, or 3 times the money. In other words, one of the things I'm going to talk about in the next couple of slides is taking a look at what you're doing to see if you're not picking very good charts, or if you're picking good charts and you're doing such a terrible job managing that you're not making the money. What if the trades you're picking are going 4 times further in movement than what you're taking? Do you even know that is the key question. So that's awareness. Number 2 is going to be self-evaluation. Self-evaluation, the answer lies in your past trades. If you are at the level that you're risking any money at all, if you're doing this in the trading world according to Paul, if you're risking any money at all, it means you should be serious about what you're doing, trying 100% to have all good trades. Or even if you're paper, now if you're paper trading in the very beginning, your goal is to just be going crazy and do anything. So don't worry about that. But if you're paper trading, you're at the level that you're paper trading in order to advance the money, then you could also check this, because if you're paper trading seriously, or if you're risking any money at all, you should be looking at your past recent trades, a lot of them. There are many tests you can do, and in class I'd go over some of these, but the goal is simple. The general goal is this: how much could I have made in hindsight, and am I proud of what I did in real time? In other words, you go back and look at your trades. You say, obviously you're looking at several things when you review your trades, but right now I'm talking about your management. So you have some strategy, whatever it is. You get in long at some number, you have a stop at some number, and you took your money somewhere. Now the question is, you go back and look at that chart and you say, how much money could I have made on that trade? Now obviously there's going to be some flukes where you could have made a ton, but who knew? But what if all of your trades are moving multiple times the money you're taking? Then the issue is not your chart reading. And this is where so many people, I'll see people send in trades like this where they're actually doing a good job finding charts. They seem to have good technical skills. And they're telling me that they want some advice on the strategies they're using because they're not working. And I just want to pull my hair out. I mean, they send me a chart. I literally have had this more than one time where people will send me a chart. They'll get into some trade and they'll stop out right there. And the chart goes like this. and they'll ask me about their strategy. I'm like, did you even see what this chart did? You sent it to me. Did you even notice? Oh, yeah, wow. I guess that would have been my whole week's profit today. They don't even realize it. They never go back really to look at it. They just accept, okay, well, that stopped out. Let's go to the next trade. How much could you have made in hindsight? Am I proud of what I did in real time? So to go back and look at your trades, Paul, that may take a long time, right? That may take a long time. Really? How long would that take you to do? How long would it take you to go back and look over your last 20 trades? Give me a number. And go crazy. Just go crazy for me. Just really exaggerate it even. Give me an exaggerated, crazy, big number. How long would it take you to go over 20 trades? Assuming you're slow at reading, you can't use a computer very well, and you're working with a paper and pencil. How long you want? 5 years. How long? 20 minutes? Oh my! I thought you'd at least say 2 hours. Let's say 3 hours. Let's say 4 hours. Let's say it takes 6 hours. Who cares, right? 2 days? Okay. But here's what I want to get across to you is, I haven't done this in a while. Let me do this for fun. I just want to turn your head for a minute here in terms of, yeah, exactly, John. Give me a 1 if you have worked for somebody else in your life. That's going to be probably almost all. Just give me a 1. Play along with me here. Unless you inherited all your money or started off at 18 in your own business, right? Everybody probably worked for somebody else in their own. Okay. Question number 2. You're going to type a 2 for question number 2. Question number 2. Of all you number ones, how many of you worked on a salary job where you were not directly compensated for working over 40 hours a week? Give me a 2. And that probably, anybody who typed a 1 probably is typing a 2 in my estimation, right? And not directly. I know indirectly you maybe you got a raise, or maybe as a salesperson they got you more, but you were not directly compensated for putting in that overtime, right? Of you twos, type of 3, how many of you under that situation went ahead and worked 50 hours a week sometimes, even though you knew you weren't getting paid for more than that 40-hour week? Go ahead, how many? Probably at 50 hours is probably all of you, certainly included me, right? Want to go for number 4, 60 hours? I can keep going, right? You get my point. My point is that you are willing at some current or prior point in your life to put in 20 hours a week for somebody else. Right, Gary, exactly, right? For no compensation. And now the thing that can make you way more money than putting in overtime for your boss, people don't want to do. Not even 3 hours, not 4 hours. Work on trading plans, review trades. I know many of you do. Don't get me wrong. I know a lot of you do. But maybe a lot of you do because you've heard me yell about this for years. You know, some of you have been around for a while. And for those of you that are not, this is the most important thing you can do. I mean, you can't improve if you don't even know what you're doing wrong, right? And if you're doing okay, guess what? There's infinite money to be made in the market. I mean, there's no need. You have to stop improving. You know, you can keep improving. It's the most valuable time that you will spend. If you owned a business, wouldn't you follow up on your employees? How many of you owned a business? Yes? How many have owned a business where you hire people? Yes? Or even if you're a manager, where you manage people? Yes? Right? I don't even have to answer. Did you follow up on your employees? Did you check to see if they do what they're supposed to be doing, or if they're stealing? I mean, of course you did, right? Well, guess what? Guess who your employee is right now? You are your employee. You have this idiot that works for you every day, and he's an idiot. I have an idiot working for me, and you can't stop the idiot from being an idiot. That's what they are. Our idiots are just idiots. They're always going to be idiots. But the intelligent part of you can manage that idiot, and that's what you have to do every day. That's what you have to think of it as. You're almost in a constant battle, and especially day trading. You know, the issue is minimized long term, and the reason is simply because all your management decisions you have all night to think about, right? You come home from work, if you're working, end of the day, oh, here's what happened, oh, I'm mad, oh, I'm going to sell that, and by the next morning you go, oh, well, you know what, why don't I just follow what I meant to do in the first place? Day trading, emotions get in there, it's happening faster, and you end up with employee problems, right? You are the best and worst employee when trading, right? Choices to manage. This is not an easy step to explain here. And this means it's kind of, how do you manage? You know, how do you manage? I mean, first of all, there's chart knowledge to manage. This is one of the things I go over in class. I'm not going to go through all that, but there's kind of a long process about understanding different methods you can use to split up a chart to manage things effectively in a way that you can handle psychologically. Because you have to blend it with your personality, right? And if you really want to make a change for the better, you have to decide for yourself too if you really are trying to make a change, or if you're just going through the steps, just going through the motions, because to really make a change is not always all that easy. So I want to introduce to you one of the things that I try to do, the title of tonight, which is the walk away, which is more, and you can see what I'm leading up to now. This is more than just to say, oh, walk away on a trade, on one trade. Well, it's not quite that simple. Many times that'll cost, well, sometimes it'll cost you money. Most of the time to me it makes you money. But walking away in a trade, the better the trader you are, the more money it's going to make, because the more you potentially have good trades, the more those trades are probably going to move, and the more it will benefit you to let them run. How good you are at that is something you have to check per the last step. Day trading, get yourself in a position where you have some money in the bank, and open positions are set up in a way that worst case scenario you lose 0 to 1 hour and could easily make over 1 hour, possibly much more. So in other words, you're trying to get in positions in a way, and I usually take 4 or 5 positions throughout the morning over the opening hour. And my ideal day, my typical day is like 4 trades over the opening 60 minutes. And my goal number 1 would be exactly what it says here. To be in a position that maybe like at 10:30. This is my style. Now again, I'm not teaching you have to do this time, You can trade during lunch, you can trade in the afternoon, but I think you have to pick, like I've said many times, a favorite 2 to 3 hours and focus on that, get good at it, and stay away the rest of the day. You should not be sitting there 6.5 hours a day. You can come back and take a look at things, but don't be sitting there the whole day. You lose your focus, you lose your edge, you lose everything. And it's very helpful to walk away as a day trader and come back and see a new set of charts and start over again, sort of. So the goal for me is to get set up in a way that at 10:30 when I go to walk away, I maybe have raised a stop, I've hit a target or something. I'm in a position where if the worst case scenario happens, I'll be somewhere between break even and down 1 hour for the day. That'd be the worst case. And the best case, of course, I'd be making over the day's goal, or naturally the best case scenario, who knows how far something may go. See, this is where you have your edge. On the downside, it's limited. There's your stops, there's your losses, boom, boom, boom. But on the upside, when you walk away, there's no limit. Now, you don't always get home runs when you walk away, but you do have a better chance to getting to bigger targets if you're not over managing things. Now, day trading better. On a good day, when things are going well, get yourself in a position where you have some money in the bank and open positions are set up in a way, the worst case scenario, you're making over an hour. In other words, I'm over my day's goal, even if everything fell apart right now. That's the great thing. That's when you go out and have fun, because you're like, if I come back to a disaster, I still made my day's goal. And you could easily make much, much more. This is where you go for the home run. This is where you step back and say, home run time, all right? So again, I threw these next few slides together late last night because I always want to try and get them done. And again, this was yesterday's trading results. I never go back in time, and I always take the last day or two. So this is just what it was yesterday. But what I want to do is going to be interesting. I've never done this. I'm going to kind of walk you through my thought process for the day. Now, on one hand, I thought this is maybe something I should only do with the seminar students. But on the other hand, I'm like, well, no, because none of this is teaching you how to trade. This is just saying, if you know how to trade, here's a great way to try and maximize your day trading profitability. It's more of a psychological thing than it is anything else. So here was yesterday. There were 5 trades. 4 trades. I can't even count. There were 4 trades. 3 were done early. Now, I know, sometimes you see something like that. If you're not a particularly quick person, you're thinking, oh, I don't like this. It's not. I really don't think it's hard at all for anybody. I mean, my God, I'm doing these and typing to the room and running, and I'm telling hysterical jokes while I'm doing this. So sometimes you have to miss a trade because there's 2 things going on at once. And, I can't. And all the time I look back and go, oh, I missed that because I was doing that. But you pick your favorites, you do them, and if they're spaced 2-3 minutes apart, I mean, what are you doing in the meantime? Sometimes I'm looking at the news in the background. I'm talking to you guys. So don't get freaked out, because to enter a trade, it takes just seconds. You put in a stop loss, it takes seconds, and you're on to the next trade if you want to. So PFE was I treated it as a tier 1 gap, which means I was getting into it. I was not going to miss it, period. FSR was a different trade, but it was entered 3 minutes later. LVS entered at 9:40, and then back up, let things settle down, and then I go for what ended up being my walkaway trade. Now, it's not always one trade. Sometimes it's the whole day. But let me walk you through exactly how this happened, the thought process. That's the total, so that's the end of the day. But let me go through this here. So 9:30, boom, my favorite trade is PFE. You guys following me here? I'm going to walk you through the mental process to set up the walkaway day, okay? So PFE had to have this one. Not going to miss it. Okay? So opening minute, I think it actually happened the second minute, whatever it was. But so I get in PFE. Wasn't the best entry. Wasn't quite what I wanted. It was a little tough. The opening minute, it was a little choppy. It was a little too thin. I was a little afraid of it. In the second minute, it filled in a little better. So I got a little not as great of an entry. So I'm in a trade. And when I'm in a trade, I could lose 1 risk unit, right? I could lose 1 risk unit, so I know that. Now, I will always take a second trade. I'll always put myself in a position where I could be down 2 right out of the gates. Why? Well, because I hope I'm not down 2, because I usually have a couple of favorite trades, and I'll do that. But in this case here, PFE, after I got in, it fell very quickly to a cheap first target. So I took, it's a 1 hour target. I mean, there's nothing wrong with 1 hour. I mean, that's actually my day's goal. So I took 1, but I took half, right? Took half the trade. You follow? So it says here at 9:32, that's the time, 9.32, that's time. I'm plus a half an hour, closed out. Now, the back half of PFE, this is kind of a soft thing. I mean, I haven't lowered the stop. The other half of PFE theoretically at this point could be a full stop and I'd be back to zero. But you kind of have to use some common sense. I'm like, okay, you know what? The back half of PFE, it's probably going to be green, right? I'm probably going to make money. I don't know yet, but I'm thinking in terms of total trade management, total day management, total account management. You following what I'm saying? I know I'm talking fast, but I have to because I'm thinking fast, right? So I'm up a half hour, so I'm saying, okay, back half PFE is doing great, it's grinding lower. I do a second trade even without being protected. Here's second trade. So now we're FSR long. FSR long, getting FSR long, boom. That's 3 minutes later. Everything's fine. I'm going along. I'm looking for another trade. FSR is doing pretty good out of the gates. PFE back half is still dropping. Everything's looking good. Right now, it looks like there's zero chance I go negative as of the first two trades, right? I'm looking for that next trade, and before I get to the next trade, FSR ran pretty quick. You can see the timer. 5 minutes later, I hit a first target. It was the target I picked on the chart, whatever it was, didn't care, happened to be about 1 hour. But again, I took half, right? Took half. So at 9:38, I'm up 1 hour, which is 2 half hours, right, in the books, and 2 open back halves that theoretically could still stop out, but in reality, they're not going to be stopping out. They're going to be somewhere green. With me, everybody? Stop me now before I go further. Okay. So again, this is just, I did this once with the seminar students and they loved it, just the thought process. What are you thinking throughout the day? What are you doing? Are you just out there cranking out stuff? Or are you really thinking about this? I'm really thinking about this stuff. But to me, it's kind of second nature, just kind of habit. So then LVS comes along, 940, LVS short. And by the way, I have one, I'm not doing charts on all these. This is not about the trades. This is about the management and the psychological part of it. And I do have one chart here for LVS, which I'll show you later because I just thought it was kind of funny. LVS I get into is a short. So now at this point in time, I don't have any new summary here, but obviously I have 1 hour in the bank, 2 back halves that are looking good, and LVS could be a full stop out at this point. So I'm kind of building into the day in a way that at this time, probably can't be negative. Probably can't be negative. Maybe could be if everything went south at the same time. So the next thing that happens is that PFE back half flies. This is a short. This flew lower, just cascaded lower. Didn't expect it. I actually wanted the PFE back half end of the day, but when you drop 2.6 hours in 10 minutes, guess what? I call that the free money. It did go lower by the end of the day, but that's not always the only answer. Because if you hold this and it backs up, it may affect my ability to take another trade and be safe for the day. So the free money like that, I don't try to take profits quickly, but the free money, 2.6 hour in 10 minutes, boom, I'm done. So now I've got, at 9:43, I got 2.3 hour locked. I'm trying to make 1 hour a day on average, not a max, but on average. So you want those big winning days. 2.3 hour locked. FSR is PFE is done. FSR back half is still open, but after hitting that first target, it's not likely that's going to go negative. And LVS is, total who knows, but LVS was dropping, so LVS is looking pretty good. LVS then, a couple of minutes later, hits 9:45, hits a very cheap target. I will have a slide on LVS. I'll explain why on this one. But this was intentional. This is not overreacting. This was an intentional thing because of the way this was traded, because of the type of trade that it was. So what it does for me on LVS is with taking, even though it's a 0.6R on the third, I knew in my head, based on where my stop was, that it's unlikely that LVS would be going negative as a total trade at this point. Not much negative anyhow. So now I got all this in the bank. I got FSR not likely to be negative even the back half, and LVS not likely to be negative. So everything's cranking along good, no problems, no changes now, but LVS is sucking canal water. It's not doing good now. After I hit that first target, it starts going the wrong way. Actually, that's in there a little bit early. That didn't actually happen quite yet. Ignore that, I think. I have that on the wrong slide. What happened next? I may be forgetting it too. So at 10 o'clock, I got 2.6 locked, and I am now looking for another trade. Now, what am I looking for? Well, at this point, you get a little bit of view of the market, what you're thinking, where you're going. I always have a market bias, but a lot of times it changes. And then at this point, I'm thinking market's higher. Let's get some goofy little thing. And I always have my charts full of stocks. There's bullish thumbnails, bearish thumbnails. I started looking around, and I actually didn't find this one. I had a couple things in mind. Somebody in the room It was on my list. I think it was on my list. Yeah, it was because I had a chart up that said Fubo. Fubo was just what I wanted. It was perfect. So at 10:08, I get into Fubo. Okay. So during that time also at, you know what, that's it. So 10:08, I get into Fubo. We still got LVS back 2/3 open, not just back half. FSR back half open. But I know 2.6 in the bank. This is just a beauty day. I want to add one more trade kind of for the walkaway. Something, because the problem here is FSR is only half open. LVS, it was started to not do real good. So I wanted that one other trade to say, you know, if I walk away until lunch, what's going to put another 2-3 hours in the bank for me just for free? That's what I'm looking for. So Fu will enter. It's walkaway time. 10:10, 10:15. It's walkaway me for time at 10:10. I sat and chatted with the room a little bit, ran over trades, that type of thing, but it's walkaway time. Nothing I can do. Stops are in place. I adjusted stops on FSR. I adjusted stops on FSR somewhere. LVS, I don't remember where that was exactly at that moment. And Fubo is a totally open trade that could fully stop out if it wanted to. Check in at noon. At noon, I had put stops on LVS. LVS hit a target, and actually I think I'm fudging a little bit here because I think I made some adjustments at 10:30 before I walked away finally. But I took a second target on LVS, which was a 1R target, and then I put the final trail on LVS somewhere where it went out while I walked away. FSR, the back part of it, ended up trailing out at break even. And by the way, this went on to be a 3R back half, so my exiting at that point was very ill-timed. I went 2 cents under my trail stop and then went on for a 2.7R move. So that was obviously not something I'm happy about. Doesn't mean I did it wrong, but I wasn't happy about it. So come back at noon, FSR goes out even, back half LVS hit target 2, the rest is break even. I'm up 3, and I have Fubo totally open, which could stop out or bring me down to 2. So now I'm in a position where on the walk away for the rest of the day, which I did, just goodbye. Come back, I could be up only 2, double the day's goal, or I could get some more. And Fubo is who cares, right? Now this is part of the point of this, is that it's one thing to say, just let it go. But can you really do that? Can you do that if you're down a half an hour and this trade's up 1 hour? But here you're in a situation where you're like, to me, it's just like, who cares? This is where you walk away, and on balance, you're going to make a lot of money doing this. Come back, check in at close. Fubo is a homer, but kind of a home run, right? In other words, 2.4R just to top off the day. No sweat, not even there. I did at one point, at some point when I peeked in, I raised the stop on it to a point, not because I wanted to protect profits, because it was up so far that there was a point where it protected about half of the loss. Not that I wanted to do that, but that's what the chart said to do. And that is how I handle management day trading. Boom. I want to show you one other thing on here. It's kind of a review from last presentation where I was talking about math, whatever. Remember the 3 legs of the stool? And I talk about superior technical understanding, psychology and or experience, and then math and probabilities. Here's the LVS trade I just showed you, right? LVS right here. 940 yesterday was a short, right? Oops, I shouldn't have said that. I was going to pretend. LVS, look what I did. What a great trade, right? You go long right here. Boy, that makes like 4 R's. Except guess what I did? I didn't do that. I shorted it. What a stupid trade, Paul, right? Here's the point I want to make though. It made money. Now, it turns out in hindsight, boy, that was the wrong trade, but it made money. And it made money, what I want to point out is not by simply doing what a lot of people do, is say, oh, just take a cheap target anywhere. If LVS would have fallen, I would have had some. If LVS would have done this, or done this, or done this, I would have made big money on it. But yet, the entry/management was fantastic on this, to the point that even though it turned out to be completely the wrong trade, I made money. What did I make? Not quite a half an hour, third of an hour. Made a third of an hour, but you know what? It's better than a full loss. And that's just from great entry management concepts. And it's unbelievable. I haven't looked at the clock this entire time, and it is 5:59. Oh, I had a funny slide here. Boom. Bad trade, Paul, but it made money. 5:59. You were a quiet group, but I was nonstop talking this entire time. So let me pause here and ask you if you have any questions or anything you want to go over. And by the way, that doesn't always happen. I mean, obviously, I have losing trades. No matter what I do, sometimes it turns out to be a losing trade. But I'm just making the point, there's a lot of things you can learn that greatly enhance your odds to maximize winners and to help minimize the losers, other than just, terrible management. Well, thank you, Jamie. Okay, Trader Jeff. Well, thinking is the first process. And like I say, for those of you that are just here for the free info and going about your merry way, that's great. The first step is ask how much this applies to you. I was going to ask this question, I never did, which is to each of you, how much of your target do you end up taking? Do you even know the answer to that question? Most of you would have to answer no. I know some of you would know exactly. If you're setting up for average 2.2 R targets, what do you take on average? Do you even know? Do you even know what would have happened if you would have taken every stop and used an extra 50% more room than what you did? Would that have increased or decreased your profit? Bars just got here and missed most of the webinars. Bars, I will not send a link to the webinar because I don't know who you are. And you don't need to email me because they are posted on the free stuff page and on YouTube, typically on the weekend. So you got to give it 3-4 days. Okay, Bars? And if you want more information, if you email me and say, how do I find the free videos, I have a cut and paste, reply that I can send to you that gives you the details on where to find these videos, okay? Yes, the concept on LVS is that it had a big move up, 3 days up into a daily resistance area. It's not been the greatest trade lately. And that's why it sold off as much as it did. That's why I was able to make money on it because I got a little bit of a move. But yeah, the bulk of the trade went the other way, obviously. Any questions, anybody? Anything you want to go over? You guys all know about the free stuff page? Use failure patterns are the best type of entry. I don't like the word timing, but failure pattern entries are the most secure entries. They're the most secure entries. Sometimes they produce a late entry, so there's different entry techniques I use depending upon my confidence of the overall trade. When I'm not that confident, I like smaller time frame pattern failure. It's a great question. Joe, I do sometimes. But what I actually do, Joe, is I have actually kind of, my style is more that when I reduce on a trade, I look around and decide if I like another trade better. In other words, to the account concept, I'm adding and reducing. I'm adding a new trade because I'm reducing the loss. Then that's kind of what I showed you here. So there are sometimes situations where the trade I'm in is the best add. And I do that still, but I probably once every 2 weeks is about how often. So I look around whatever the best thing to put money is, whether it's a pullback on an existing trade or whether it is getting into the next trade. But the concept is still there. Yeah. I think we'll call it a night, guys. If you're in the trading room, I'll see you tomorrow. But otherwise, for you free members, I'll see you. Have a good holiday weekend coming up, Labor Day. See you guys. All right. Have a good night.